This is the first episode of a series I'm going to do on financial planning, using my expertise and my experience in the field to bring this education to the common man. So I want to give an overview. We're going to talk about cash flow today, and the overview here is to understand a few simple things about your money, and you're going to get the whole gist about cash flow. So you have to understand income. It's the first thing, money that you bring into your bank account. And then you have expenses, things when money goes out of your bank account, and the difference between the two. So when the income is higher than your expenses, you have something left over that's called your surplus. But if income is not higher than your expenses, then you don't have anything left over. Actually, you have too many expenses that you can't pay for, and so you have a deficit. You're in the negative. Surplus, deficit, important terms to know. And now your surplus as compared to your income is a ratio. So I'm going to give an example. Let's say, for example, your income is 100. Your expenses are 50. Your surplus is 50. The ratio between your surplus to your income, 50 over 100, is 50%. So that's a ratio. So this is what's super important about cash flow. Your income, your expenses, what is that surplus number, but what is that ratio? So that's pretty much the overview to this whole thing. And cash flow is all about that. How do we get more income? How do we avoid expenses raising too quick? Right? The thing about income is that you're always going to want to find ways to make it go up. And expenses, you are never going to just keep them the same or have them go downward. It's always going to be something that goes up. This is due to economic inflation, but it's just due to us being humans, and we always want a higher living standard. So we're always going to want to see a better surplus. But that's the whole cash flow game. Money coming in, money coming out. That's one aspect of financial planning. And so I want to take more time in other content to talk about these things more specifically, but that's the overview for cash flow. Separately than understanding that, I want you to know that there's accounting. So however you want to do it, you want to look at your bank account every day and count up to see what your income is, what your expenses are, or if you have an app that takes account for all these things and it breaks it down nice for you in a pie chart. But I want to explain the principles, the basics of accounting, how people do it in business, and how you would do it if you go to a professional, like a tax professional, someone that does your accounting and helps you do your taxes and stuff like that. I'm going to talk about how they do it. I'm going to break it down simple first, but again, in other pieces of content, I'm going to dive in deeper to this stuff. When you're doing accounting, okay, you're going to have something like this. It's called an income statement. And what it does is it separates, has a box on the top for income, the box for the expenses. So you put all your expenses in that white box, and all your income items, whenever you bring money in, goes in that white box, and then the expenses get filled in the bottom box. So for this example, let's say you have your main job, your full-time job, and you have income in that, but you also got a side hustle. So you bring in income on the side too. So you have two items for your income. You got your full-time job, and you got a part-time gig that you make money. So you bring $4,000 on your full-time job. That's the salary at that job. Every month, you know you're going to get paid $4,000. You show up, do the work, and every month you have $4,000 go to your bank. And then your side hustle does like about $1,000 on average. So let's call it $5,000 altogether. The 4 plus the 1, $5,000 a month on your income. And on your expenses, you got, for this example, we're saying rent, let's say $1,200 a month, food, 600 a month, transportation, 700 a month, add it up, and the total expenses would be 2,500 on a monthly basis. So here's what I'm talking about. There's income, expenses, and a surplus. So the difference between the $5,000 in income and the 2,500 in expenses at the bottom is that's the surplus, 2,500 a month of surplus, which is a 50% surplus ratio. So this is just an example, but this is something that you could do real quick, like on a piece of paper for your own self. You could do like rough numbers just in your head, or you could do like through an app. There's a lot of resources out there. I actually go through my bank account and count, not on a daily basis, not necessarily on a weekly basis, but on a monthly basis. I do look at my expenses and see how things are, like for groceries. S- Um, for a long time, it would be like 500 on a monthly basis that I spend on groceries, well, for my household, me and my lady. And that changed too. Sometimes it was less, sometimes it was more, and for other people it's less or more. But I look at it every month and see how does that number change, or what is it looking like in the last 3 months. And once I figured out it doesn't change that much, then I just plan for 500 a month. But it took me like 2 years to just look at my bank every month and see like what did I spend on. But there's a lot of cool apps that help, like Mint is a good one, and then some of the mobile banking apps that your bank provides has those resources. And in reality, you don't have to do it forever. You just have to do it for a little bit. You have to do accounting on your own finances just for a little while, like a few months in a row, to catch the patterns, the trends. And then you're going to get so good at it that you're not going to need to pay so much attention so closely, but you're going to understand how to do the accounting for yourself really, really well. And it's going to help you plan for the future. So when you can see what kind of monthly patterns there's been for the last 5 years, that helps you think about what the next 5 years could be, or what you're going to do differently, or why the patterns are going to change. So in the cash flow game, like I said, we're always wanting to make more money, bigger income, avoid the expenses, raising as fast. Of course, the income's got to raise faster than your expenses are raising. Think about it. So the gap between your expenses and your income is the surplus. So your income needs to raise faster than the expenses can raise in order for that surplus gap to get bigger and bigger. So that's what the whole game is about. And when you're doing your accounting, you can see when that's happening and when that's not happening. And you got to keep an eye on it. The last topic I want to talk about in this episode here is about the way in which we make money. So let's talk about income sources. And for the sake of making the conversation simple, I want to categorize two different ways of making the money. Like you can have an income source that's labor based, meaning that you're going to have money sent to your bank account based on things that you do with your body. You're going to go and work, or with your brain, right? But you're going to do some actual work yourself, and there's going to be money sent to you for that. Another way to make money is through investment, which means you delegate resources that are to your name into some type of work, some type of business where other people may be doing the work. Well, you're going to get paid some money for investing your resources, investing your money. So by investing, and investing means more than just putting money into a business. That's why I said resources. But to make the conversation simple, that's what you would need. Either you're going to go put your own body to work to make money, or you have money to put to work, and that's going to make you money. So you have those two ways to do it. Now, most of us have to go and do some work. Okay? Most of us don't have a bunch of money that we never have to work. Like most of us have to work at least for a period of time, whether that's a decade, 2 decades, 3 decades. And then we stack up money, and then we use that money that we stacked up to then work for us to then eventually be able to quote unquote retire. So if we're going to use our own labor to make money, how do we go about doing that? And there's different ways that you make money when you're making money through your own labor. You're getting paid an hour. Is your pay determined on a monthly basis? Like, this is what you're going to get every single month or yearly basis, right? Salary. And these things are wages, salary, wages. These things are based on you spending your time on something, your time and energy, and you're being paid based on time, quantifying time. So that's a way of getting paid by your labor. You can also get paid by production, which means you're getting paid based on what you produce. It's still based on your labor, except it's not a wage. And what's a good example of this? Let's say, let me give an example of this. So, an interesting example is, let's say somebody who's homeless and struggling on the street. They can get a job where they're going to get paid an hour. Or sometimes what we see is we see folks recycling, and they're not getting paid by the hour. It's not a job. But what they're trying to do is stack as much recyclables to turn in to the recycling center. And the recycling center is going to get the money from the government. So the recycling center likes to break off to people who come and bring them. These people are getting paid by production, the weight of what they bring. And that's the example. So a lot of jobs are more this way. And what you really want to be in is like in a way where you're going to get a commission. So salesman is most common that you all get commissions. You know, you sell something, you get commission. You might still get paid on an hourly basis for giving your time, but you're going to get paid commission because you're going to sell products. That's going to bring revenue to the business. Then your commission is a percentage. It's a cut of what you're bringing into the business. Other jobs also earn commissions that are not sales-based. Like, for example, pest control, in which somebody is going to show up to everyone's house, like the customers. Let's say there's 10 customers, and the pest control technician is going to show up to each person's house and deliver the service and talk to the people and see if there's anything extra they need or anything they're concerned with or unhappy, answer any questions, and give the customer service side of the job too. Now, these people are very important to the business model of the company, so they are also given a commission. It's production based. So based on these customers, they're paying for services each month. They pay each month for the services. And so long as they're happy, they're going to continue paying. And one of the most important things for these people is that the person that shows up to their house does a great job. So it makes sense in the business model that worker gets a commission. And it's a great incentive for the worker to keep as many customers on his route, keep them all happy because he's getting commissions off of them. If they don't like him, they start canceling, he's going to start losing the money, losing the commissions. If he makes his money off of spending his time, it didn't matter if they were happy or not, or if they canceled or if they kept. So those business models, it actually keeps a lot of people happy because the business model's working, they're happy, the customers are happy, and the worker has a way to get better at his job because if he is more efficient, he fits in more customers on his schedule, then that's more money, more commissions for him. If he gets bigger customers who are willing to pay more money, then he's always going to get a percentage of whatever the price is. So if he's able to do bigger prices, then he gets a percentage. That's a bigger percentage. So this is a better way to get paid is what I would say. But it's not necessarily the better way for everybody. It's just my opinion that you want to get paid for production. That way you could have that control and say, hey, I want to go hard and I want to make this much money this month. And my job has that opportunity for me to plan that out so that I can go get that. And then once you do have money, everyone should be thinking about taking money and investing the money so that the money can do work. You don't have to wait till you have a whole bunch to think that way and say, hey, you know what, I'm just stacking it up. I don't know what I'm going to do yet. I'm just stacking up. I'll think about it later. That's not the way I think people should go about it. If you're stacking up money already, you should already be knowing where that money is going to go to, right? When my savings account hits this much, I'm going to take a portion of it, X amount, and I'm going to put it here, right? And then the second thing I want to save up and invest into is here. I think that's a better way to go about it and determine which opportunities are good for you. But there's a whole bunch of different ways that your investments will make money. There's so many different investment opportunities out there, and they all work differently too. So I'm not going to get into that, but I'm just making the point that cash flow is a big deal, and it's forever. It's a thing you work on forever. It's only one part to the financial planning, the whole financial planning process, but it's where we start with. It's the blood to the whole finances. And so you have to really know this part to get the rest right. But I hope I was making that very clear, was that there's different ways that you're making money. And what's more important is to decide which income sources, which ways of making money fits your life according to like your personal goals. When you envision your life in the future and you say, you know, I want to be at a position where I don't have to work for my living anymore, like my investments and everything has provided a cash flow for me. Whether I work or not, I'm good. And that's a dream and everything. But then what will you do with your time from that point forward? Those are the questions. Those are the answers you should be coming up with, because as you come up with those answers, it will be real easy to match up the investment opportunity according to how it makes you money with that vision that you have for the future.
I know you can. I just been on rap, missing days with
So catch me next
taking
time. That's
time
all
off
this
the
week.
gram, making beats with the tap, put the city on the map. When I blow up, you know there's no coming back. You know I got on all black. You know I'm posted in the back. I know the definition of a fan. Gotta take more time with fam. I know. Time, my God.